Hello, good morning and welcome to ET Now's The Newspaper Show with me, Varun Hiremat. Before we go any further, let me remind you that the newspapers are completely safe. We're now exploring delivery arrangements that can be made to you. So if you are interested in your newspaper, please go to wantmypaper.com and there you can explore all the options available for newspaper delivery at your residence. But moving on, let's get a charge on here. The top 10 stories of this morning. Technical rules likely to cut Chinese imports. Chinese tech companies with government links face curbs. Brands looking at Made in India tag. Easier fundraise rules on SEBI Board agenda. Adani Power to pay 33.8 per share to delist. And the economy to contract by 3.1% in 2020 according to Moody's. IIT-Delhi's testing kit to hit the market this week. Government prohibits exports of PPE but allows masks. Trump suspends H-1B, H-4 visas till year end. And first L&T Gen level talks since June 15 clash. Let's now move forward to the top corporate stories of this morning. L&T Hydrocarbon inks an MOU with KBR. Life medical insurance set to become dearer. Telcos beef up security against cyber threats. Companies in a spot over FPI investment limit rejig. And Amul doubled marketing spends during the lockdown. Your top 5 market stories for this morning. Chinese companies' loss may bring gains for local infra. Eicher volumes may slump on tepid Enfield sales. UTI AMC gets SEBI nod to launch IPO. Deposit surge hits banks' net margins. Gold hits record high, closes in on 50,000 rupees. Alright, now let's move on with our individual stories. The first one being from the telco sphere. According to an Economic Times report, India is eyeing about 5,000 technical regulations to rein in cheap imports and provide a quality boost to domestically made industrial goods. Telecom products, electronics, steel and chemicals are all part of this. So basically, these rules are likely to see or lead to a cut in Chinese imports, quality norms on cards for steel and the telecom sectors, and India plans, like we said, 5,000 new regulations that are going to make imports all the more challenged. Alright, the next one is on the front page of the Economic Times this morning, and that is about the Chinese tech companies. With no resolve to the skirmish along the Indo-China border, India is now trying to identify Chinese technology companies having direct or indirect links to their government or military. Such companies will face challenges in getting investment approvals, given that this could have national security implications for India in the wake of the recent border hostilities. So, you know, there's a war which was fought, which is a Cold War as well. Now you're hearing the US-China trade deal go south. So we're also exploring some options to insulate ourselves, at least on the military front, from Chinese technology. Okay, coming back to the telecom sector, according to another Economic Times report, and this is on page 8 of the paper, India's top telcos, Bharti Airtel, Reliance Jio and Vodafone India, have upgraded their network security after the recent China-India border clashes. They are also urging business clients to take proactive steps in the wake of the growing cyber threats. With even the government warning of imminent attacks, the Indian Computer Emergency Response Team, CERT-IN, had issued an advisory against possible phishing attacks. So this is quite an interesting development to keep an eye on. Okay, let's switch gears yet again. Economic Times, page 4. My colleague Vinny is now going to be joining us. Good morning, Vinny. Welcome to the show. It seems that Eicher's volumes may slump on tepid Royal Enfield sales. What's your take on the situation?
Eicher Motors, the maker of Royal Enfield bike, is expected to face a significant decline in its volumes as consumers are avoiding discretionary spend, especially with amid the job losses plus pay cuts. So that is causing some pressure on the consumer's discretionary spend. Now, around 85% of the company's customers are mostly upgraders. That means they already own a vehicle and they buy a new one for a novelty factor. So that is also something that causes pressure on the company, and that's why they're expecting to see the volumes to decline even further. Now, in the last 6 quarters, the company has seen a decline in the volume growth. Continuously, the volume growth has contracted over the last 6 quarters. So that is also something very important that is showing the consumer trends even before COVID were weak. Now, total volumes for FY20 fell by 15.6% to only nearly 7 lakh units, and it further fell 85% to 19,204 units in the first 2 months of the current fiscal year, that's FY21. Now, analysts are expecting that a drop of around 15 to 20% will be seen in the full year, which will result to the lowest volume in the last 5 years. So that is something that we should keep an eye out for. Now, to counter this lower demand, the company will continue to launch new products and have a strategy for that launch of new products, so that the success of the new models will be crucial in reducing the dependency on the classic 350 model, so which forms around 70% of the total revenue. So that is why they will be launching new products which will reduce the dependency on this product. So let's see how this actually works out for Royal Enfield, especially the low utilization of the plant and the inability to pass on the higher cost is surely impacting the profitability of the company. Now, they have taken a price hike of 3,000 per unit in April, but the margin pressures may still persist as they cannot, the government challenges on demand and margin front, plus stock premium is also quite high, so that could also be some pressure on the company's stock as well. So let's see how Eicher Motors actually moves now.
All right, thanks for that, Vinny. It seems that if you go to page 4 of the Economic Times, the UTI AMC gets the SEBI nod to launch its IPO. Existing shareholders of the fund will sell 3.90 crore shares in the issue that could help raise around 3,500 crores for them. The IPO is likely to be priced at 850 to 900 rupees per share, but do remember, this will be the third public offering in the Indian mutual fund industry after Nippon Life Asset Management and HDFC Mutual Fund. So this is an interesting one to look out for. UTI AMC could be valued at 13,500 crore based on these projections. Moving forward, an Economic Times page 8 story on Adani. It seems the board of Adani Power has approved delisting of its shares at a floor price of 33.82 rupees per share, which is almost 11% lower than the closing share price on the bourses. My colleague Vivek is now with us. Good morning, Vivek. Welcome to the show. Could you walk us through the significance of this event?
Good morning, Varun. So Varun, around 3 weeks ago, what actually happened was that Adani Power came up with a plan to delist the company from the exchanges. And basically what this meant was that Adani Group, or the parent company that held close to 75%, a little less than 75%, actually said that they were looking forward to acquiring the remaining 25% stake that they did not hold in the company from the open market or from the shareholders, so that they could go ahead and take the company private. That is, they could go ahead and delist the company. Now, basically, what else actually happened yesterday is that the company has come out with a floor price, the price that you mentioned, a little over 33 rupees. However, the one thing that viewers have to keep in mind is the fact that the process is a reverse book building process. So this price is just a floor price. However, the price at which the company, if it delists at all, will be decided by the shareholders via reverse book building process, where the shareholders will fill a form at the price in which they feel that the company should delist. Now, remember, Adani Power promoters only need another 15%, because Indian rules state that if the promoter owns over 90% stake in a company, then they can go ahead and delist it from the exchanges. So basically, at this point of time, Adani Power has given a floor price. Reverse book building process is yet to be done. The main rationale for the delisting is that they want a lot more capital allocation freedom as far as Adani Power is concerned, and this particular company has gone and become one of the most efficient power producing companies in India.
Thanks for that, Vivek. We'll definitely be keeping an eye out for this counter when the day in trade opens. Okay, let's switch gears a little bit. Page 9 of the Economic Times this morning has a Moody's forecast for India, and Moody's expects the economy to contract by 3.1% this year, that's in 2020, compared with a 0.2% growth that was earlier projected in April. So the climate seems to have deteriorated. The company also expects a stronger economic rebound for India in 2021 off a low base. GDP growth for that year should be 6.9%. So 2020 looks like a complete wipeout according to Moody's, but we'll see what happens with that. Okay, the next one for this morning is Geojit in talks to acquire somebody. So page 5 of the paper, according to the report in the Economic Times, Geojit Financial Services is in talks to buy online mutual fund investment platform in India from its private equity owners as part of the Kerala-based brokerage push towards digital transformation. So this is also another interesting development. Geojit's a listed firm, so we can see how that counter holds up in trade today as well. Okay, page 11, we're now going to be talking about India's trade deficit. India's trade deficit with China is estimated to have narrowed to $48.7 billion during the last financial year, the lowest in 5 years, compared with $53.6 billion a year ago. So even 1 year ago, there's been quite a large movement. Imports from across the border dropped over 7% to $65 billion in 2019. So it seems that we're headed in the right direction as far as being more self-reliant goes. Okay, Chandra is now with us. Good morning, Chandra. Welcome to the show. Page 1 of the Times of India this time. Reports suggest that Trump administration suspends a range of work visas for foreigners, including all H-1B and H-4 till the end of the current calendar year. So what does this really mean for us over here? What does it mean for the IT firms? What does it mean for foreign remittances? Chandra is here to walk us through that.
Good morning, Varun. We've been reporting on this for the last few weeks because it was widely expected to happen. Remember, Trump had already issued a proclamation earlier this year banning any form of immigration for 2 months. He's now extended that till the end of 2020. Now, he's saying this is an attempt to curb unemployment. So in terms of the impact, clearly Indians on these visas, there's going to be a huge impact, because if you look at the H-1B work visa category, over 70% of this goes to Indians every year. And if you look at the employment category within these work visas, over 65% of this goes to computer-related occupations. So these visas are sought after not just by the likes of your TCS, Infosys, Wipro, but also global giants such as Google, IBM, and Microsoft. That's the reason why you have Sundar Pichai, who tweeted just a while back that he's very disappointed with the move and that Google continues to stand with immigrants. So I was just going through the proclamation. This will not impact those currently in the United States on these visas, so they can continue, but it will impact anyone who is outside the country or those who have applied for these visas but haven't got it stamped yet, which usually happens sometime in October. So for now, it is going to be an irritant for IT companies who had travel plans for these employees after a couple of months to deploy them on critical projects. That's not going to happen. So we have to see what the plan B is going to be. If they can convince these clients to move more work offshore, or if they will have to ramp up local hiring, which they have anyway been doing for the last few years. But this is clearly a populist move by Trump ahead of the elections later this year.
Right, Chandra. Thanks for bringing that to our attention. Definitely, we all know what Trump's agenda is, but it'll be interesting to see how our firms react, because we do have a lot of Indians who are actively pursuing these visas. But thank you very much for joining us this morning. Okay. The first round of India-China Corps commander level talks after the June 15 clash took place on Monday at Moldo. On the Chinese side of the LAC, after India verified that China had vacated Patrol Point 14 in the Galwan Valley, where the violent skirmish had occurred. This is page 1. Please do have a read if you're interested. Okay, we're winding up today almost, but before we do, let's also bring you the top 5 headlines from the Times of India. Those are that the steepest one-day spike of 1.8 lakh cases globally was seen yesterday and flagged off by the WHO. India toll tops 14,000 new cases, fall below 15,000 cases, so I guess it's some positivity there. Mumbai's share of cases in the state falls to 34%. Fadnavis to Uddhav Thackeray, fix power bill anomalies. So there's some banter going on back and forth. De-escalate Galwan, India, tells China. So we're also putting our foot down. We're not going to be bullied, and we do want an amicable close to this entire situation. Okay, so I think we will now be going to the impaired segment, if I'm not mistaken. News for the hearing impaired. The major headlines there. Listen in.